Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, December 1st, 2025, and here is everything you need to know as the markets open for today. Wall Street closed out Friday's session with solid momentum across the board. The S&P 500 ended at 6,849.08, trading near its record high set earlier in the month. The Dow Jones Industrial Average closed at 47,716.43, while the Nasdaq Composite finished at 23,365.69. Markets were buoyed by positive sentiment around artificial intelligence investments and the possibility of a near-term Federal Reserve interest rate cut in December. Tech stocks led the charge, with Tesla gaining 0.82% to close at $430.07. The broader technology sector benefited from expectations that a more dovish Fed will be supportive for growth stocks and tech valuations going forward. Earnings season has been mixed, but companies beating expectations on top-line growth and profitability have been rewarded by investors. Market breadth was healthy, with advancing issues outpacing decliners, suggesting broad-based strength under the surface. Friday's session came at the end of a historically strong November for equities. The month saw consistent buying in cyclical and defensive names alike, with investors embracing the December rally narrative that has historically favored risk assets. Some profit-taking occurred in mega-cap names ahead of the long Thanksgiving weekend, but the overall tone remained constructive as traders positioned for year-end gains and potential Fed accommodation. Indian American depository receipts showed resilience in overnight trading. Infosys ADR is up 0.34%, reflecting steady demand for India's IT services. HDFC Bank ADR moved up 0.52%, suggesting confidence in India's largest private sector bank. ICICI Bank ADR gained 0.71%, outperforming banking peers. Reliance Industries GDR is up 0.66%, maintaining its steady ascent. The unanimous strength across these four major Indian blue chips signals that overseas investors remain positive on India's macroeconomic backdrop despite some recent weakness in rupee valuations. The gains in banking stocks are particularly noteworthy given upcoming expectations for a Reserve Bank rate decision this week. For Indian equity investors, the ADR strength suggests that foreign institutional investor appetite for India remains intact, even as flows have been mixed in recent weeks. Across Asia, sentiment this morning is cautiously optimistic but tempered by some regional concerns. The Nikkei 225 is down 1.5%. The Hang Seng Index is up 1.2%. Gift Nifty futures, our key barometer for today's Indian market open, are indicating a positive start. Trading around 26,420 this morning, Gift Nifty suggests the domestic market will open with modest gains around 20 to 40 points higher from Friday's close. This signals that despite global uncertainties, Indian investors remain constructive on valuations at current levels. The Gift Nifty positioning above 26,300 support indicates bulls have maintained their footing, and any dips into support zones could attract tactical buying from domestic institutions. Asian macro news this morning remains mixed. While China continues to deliberate on additional stimulus for its slowing economy, Japan's stable performance and the expectation of continued US interest rate cuts are providing a supportive backdrop for emerging markets. The real catalyst for Asia-Pacific equities remains clarity on Fed policy, which is expected to become clearer when Federal Reserve Chair nominee Kevin Hassett's appointment is formally announced, likely within days. On the global macro front, there is one significant development you need to watch closely. President Trump has signaled that he will announce his choice for the next Federal Reserve Chair imminently, and Kevin Hassett, the director of the National Economic Council, has emerged as the clear favorite, with prediction markets assigning him approximately 66% odds of nomination. Markets are pricing in a Hassett appointment as dovish, given his historical support for lower interest rates and his academic work on business cycles and monetary policy. This expectation is reflected in CME Fed Watch probabilities, which now show an 87% chance of a December Federal Reserve rate cut. If the Fed does cut rates later this month, it would inject powerful positive sentiment into global equities, particularly emerging markets and growth stocks that have underperformed in the high interest rate environment. For Indian markets specifically, lower US rates would ease global liquidity tightness and potentially attract renewed foreign buying into Indian equities, which trade at reasonable valuations relative to developed markets. Additionally, crude oil prices remain stable around $62 per barrel, providing a tailwind for India's oil import bill and government finances. Any geopolitical escalation in the Middle East remains a tail risk that investors are monitoring, but for now, energy prices appear well supplied and stable, reducing inflation pressures for the Indian economy. The most critical domestic development this week is the Reserve Bank of India's Monetary Policy Committee decision, scheduled for December 5th. The MPC will convene December 3rd through 5th, and a majority of economists expect a 25 basis point rate cut, bringing the repo rate down from 5.5% to 5.25%. The primary driver is India's record low headline inflation at 0.25% in October, significantly below the RBI's lower tolerance band of 2%. However, it bears noting that some experts favor a rate hold given India's robust 8.2% GDP growth in the second quarter and concerns about rupee weakness. RBI Governor Sanjay Malhotra is expected to provide guidance on inflation dynamics and growth outlook, which will be crucial for asset class positioning going forward. Bond markets are pricing in a 50% probability of a cut, so there is genuine uncertainty. On capital flows, foreign institutional investors remain net sellers this month with cumulative outflows around 12,500 crore. However, domestic institutional investors have stepped in strongly as countervailing buyers, purchasing approximately 16,600 crore net in November alone. This shift highlights the growing maturity and strength of India's domestic investor base, with mutual fund SIPs, insurance companies, and retail investors providing steady underlying demand that has cushioned the market against FII weakness. A critical regulatory update for all derivatives traders. SEBI's new F&O reforms enter their final and strictest phase starting December 3rd, with hard position limits taking full effect on December 6th, with zero grace period. Net index futures open interest is capped at 1,500 crore rupees, while gross long and short delta limits stand at 10,000 crore each. Pre-open trading for index futures debuts on December 6th, mirroring the cash market structure. All prop desks, algo traders and options sellers must urgently audit their risk management systems and margin buffers to ensure compliance. Penalties for position limit breaches apply on the same day violations occur. From a technical perspective, the Nifty 50 remains in a consolidation pattern between 26,000 and 26,300. Friday's intraday high of 26,310 was rejected, establishing clear resistance at 26,280 to 26,310. The key support level remains at 26,150, with secondary support at 26,000. As long as the Nifty trades above 26,000, the broader trend remains constructive. However, a decisive break below 26,000 could signal weakness toward 25,900 and 25,850. Crude oil prices continue to trade in a stable range around $62 per barrel, providing a stable backdrop for energy-dependent sectors and government finances. Gold prices have surged higher in dollar terms, reaching $4,220.48 per troy ounce as of Friday, marking a 4-month high and up 1.4% in a single day. Silver is trading near $53 to $54 per ounce with technical upside potential towards $65.85 if it breaks above $58.65. As you navigate today's trading, remember that we are entering a critical week for interest rate decisions on both sides of the Atlantic. The RBI decision on December 5th and the Trump Fed chair announcement represent two major binary events that could drive significant volatility in both Indian equities and the rupee. The positive performance of domestic institutions as primary buyers suggests that systematic support exists below current levels, making tactical buying on dips into the 26,000 support zone a calculated risk worth considering for traders with medium-term horizons. However, I would caution against holding large leveraged positions right through the RBI decision, as binary policy outcomes can trigger sharp reversals regardless of positioning. Banking and financial services stocks deserve particular attention given their sensitivity to rate movements, while technology and auto stocks are likely to benefit from the positive morning cues and expectations of easier monetary policy. Energy and commodity-linked plays may see some profit-taking if crude oil and precious metals consolidate after recent strength. The key level to watch remains 26,000 support for Nifty 50. A close above 26,300 would be constructive for further upside, while a close below 26,000 would warrant a more cautious approach. Manage risk carefully, keep stops tight, and participate in the theme tactically rather than taking all-in positions given the event risk this week. Stay tuned for the evening wrap and send in your questions and subscribe to this podcast to hear US every day. Thank you for listening to What Will Move the Market. I'm your host Prem. Have a fantastic trading day ahead.